All right, everybody, welcome back to another video. As you can see, I have prepared a board today to talk about what's going on in the world of stocks in the current market environment. And I think the main point I want to accomplish with this video is to sort of express what I think many of you might be feeling right now. So my perception is, and I've seen more and more people sharing that exact feeling on social media and on X and Threads in particular, is that quite a lot of market participants, especially those that follow a similar philosophy than I and I guess many of my viewers as well, a philosophy we are pursuing, value-focused, intelligent investing, long-term investing, they are getting frustrated by what's going on in the world of stocks. That's particularly true because it seems like, and again, if we zoom out, I think you will have a different perspective. But if we just focus on 2025, it seems like just a few key figures are moving markets. So everyone is very laser focused on what Trump is saying on each given day. He might actually change his mind during a single day, which will lead to massive intraday market movements of 2, 3, 4% intraday. The market may move up 3% on a comment he makes. We are going to walk tariffs back. And then in the next moment, he shares that he has no intention of walking back the tariffs, and then the market tanks again. And this can be super frustrating. I actually saw this chart here, which I found quite funny. So I just mentioned Trump as obviously one of the key figures. Then, of course, his team is very important as well. Here we see the daily returns whenever Besant made a comment, which, funnily enough, actually shows a positive correlation. And whenever Lutnick or Navarro made a comment, during these days, the market on average was down close to 1 percentage points. And this already shows it can be frustrating if the comments of individuals basically determine whether the market will end up green or red. This can be super frustrating for investors that are focused on, well, what's actually going on under the hood, focused on the businesses, the business developments, obviously the business environment as well. So yeah, here we see the daily returns of the S&P ever since Liberation Day, so April 2nd. As you can see, we started off April with some pretty steep declines, 2 consecutive declines of the S&P of around 6%, which happens very, very rarely. However, likewise, what we are seeing towards the end of April is a lot of green days. And in fact, someone shared with me the other day that if we look at the bottom of this chart here, that having back-to-back plus 1% or more gains is incredibly rare too. We've only seen this like 4 or 5 times in market history, I think. So that is something quite noteworthy as well. And my perception would be that, at least for now, we likely found a bottom. So I don't really perceive a lot of panic in the market anymore. A lot of investors, and maybe retail investors in particular, are positioned quite bullish. They are investing capital into the stock market. So I'm not sure. I'm not making a market call. I obviously don't know. And I'm not seeing all too many opportunities yet, which I will get to a little later in the video. Just continuing to focus on the price development here. So here you see the year-to-date performance of the S&P, which after the, well, more recent positive development is actually only down around 6% year to date. And if you zoom out one entire year, you see that over a 12-month time frame, the S&P is actually up 8.3%. What you see here is a heat map, which just shows the year-to-date performance of various individual stocks. And we see that in particular, the technology sector, here they call it electronic technology sector. I think financials were hard hit as well. Where do we have this sector? Oh yeah, we have it pretty much in the middle. It's not that badly hit actually. So it's mainly driven by big tech, the broader stock decline in 2025. All right, just to get back to my main point here. So a lot of people are frustrated by individual people moving markets. And what's even more frustrating is maybe that there seems to be a lot of insider trading going on as well. So sometimes before maybe an important speech is given, the day prior, certain sectors that will turn out to be beneficiaries of whatever may be communicated the next day are already moving. What also happened is that Scott Bessent actually spoke to a couple of hedge fund managers. I think it was at a JP Morgan event prior to the day he gave a speech, in which he again tried to calm markets down and try to highlight that they are really actively working towards getting deals done. So this can be super frustrating. It's visualized by this AI image here, where you see, well, basically the elite celebrating inside, and it's raining money, whereas you are outside and the fool, so to speak, who is looking at negative returns. And then, of course, the whole Trump coin, I don't know, drama is frustrating too, at least for someone who's living in Europe. And I guess all of my American viewers will agree, who really is proud of democratic values, rule of law, and you basically have the president of the United States enriching himself by running schemes like this. So I think was something like the top 225 holders of the Trump meme coin will be invited to a special dinner. I don't know, very bizarre. That's all I can say here. And now I'm going to jump to the very right here. I titled this column "Worries." Brings me to this article I read this morning, actually, by The Atlantic. Maybe it's a little biased too, but it's actually a comment by someone I respected a lot. I think his name is Vitali Kasparov, or let's just call him Mr. Kasparov. And I think he wrote a fantastic comment here, pointing out what's wrong in the US right now, and what way he is worried about the democracy in the US, which I think may have a material impact on the valuation the US stock market deserves long term if people are not starting to fight back. But I don't want to make this video political. It's just something that's on my mind. And what you might have noticed is that more recently I really enjoy just sitting down and sharing what's on my mind. And maybe you find it useful, maybe not. Sometimes I get critical comments. Let me know if you appreciate these kinds of videos as well. Okay, I'm going to jump to the asset class section here. So we see that gold has been a tremendously well-performing asset class more recently. I think I would have to double check it, but I think I saw a chart even that showed that the S&P is pretty much on par with gold over a longer time frame too. So maybe 15 or 20 years even. So gold has really caught up over, well, the last year. As you can see, the stock price, the gold price is up from around 2,000 per gold ounce to 3,300. So that's like more than a 50% gain over just a single year. And Andy commented on this: if you ignore all the noise and performance from other asset classes, just do valuation work, don't panic, and always stay focused on your own strategy. Value investing in stocks is by far the easiest and safest way to get rich in the long run. And that's pretty much the point I want to make in this video as well. So of course it's frustrating in the short term to, well, first of all, stomach the pretty aggressive volatility we've been seeing in markets in 2025. And on top of that, you see markets being moved by individuals in the comments they make publicly. It may give you the feeling that what the businesses themselves are doing doesn't really matter. Just look at the performance of Tesla stock after Tesla reported their quarterly numbers, which were outright catastrophic. The stock actually ended the day up around 7% or so, I think, based on comments made by Elon Musk, once again promising that robo-taxis are around the corner. Super frustrating for investors focused on individual company performance, fundamentals. So the point I'm trying to make is hang in there. Over the very long term, company fundamentals will matter. And if you find individual stocks that are trading at a price that is not reflecting their long-term earnings potential, I can guarantee you will have a satisfying outcome. Just to wrap it up here, I also tweeted this the other day. I'm not going to read it to you, but it shows you that we have a very fast news flow as well. So it seems like every day something very material on the macro landscape is happening, which of course moves stock prices, and it's hard to keep up with it even. And we now look at the year-to-date performance of the S&P. So back then the S&P was down 13% year-to-date. I just showed you it's only down 6%, I think, year-to-date as of the time I'm recording this video. I'm really not sure if that stock performance is reflecting all of these underlying developments that, well, may pose problems in the short and medium term. I want to know what you think of all of this, so I'm going to call it a day here. Please leave a comment down below with some of your takes. I'll talk to you in one of my next videos. Take care.